So there's all kinds of things going on in real estate today, but it'll eventually crash simply because the government is making it so expensive to build a house.
We keep hearing the term real estate. What does it mean? Real estate includes property, land, structures, air rights above the land, and subsurface rights below the land. This phrase refers to real or tangible property. As a business word, real estate refers to the production, purchase, and selling of property. Real estate is more than simply a commodity. It has many facets. It has the ability to improve from a state of being unimproved to a state of being better. It's either for sale or for purchase. The government or a private individual could all possess it. Certain elements, such as constant land improvement, and individuals and corporations who allow ownership transfer, can have a direct impact on the economy. It is one of today's most intriguing and dynamic industries, and you'll see why. Houses and land parcels are bought and sold in this sector. Real estate is profitable because it meets a basic human need for shelter. As a result, property traders such as Donald Trump have made billions in this industry. Despite its tremendous profit potential, the real estate industry is susceptible to a crash. A real estate crash occurs when the market's total value plummets. Unlike the stock market, where buyers are aware of and accept the risk that prices will fall from time to time, sometimes dramatically, many people who buy a home do not believe their property's value would ever decline significantly. The question, why is the housing market going to crash, is a popular one on Google, and here's why. Because of the coronavirus pandemic's stay-at-home and work-from-anywhere culture, the housing market has been scorching hot for the past year. Experts believe there is little chance of property market's expansion becoming a bubble, but that doesn't mean you shouldn't be concerned. Last Monday, Google revealed that the search term "when is the housing market going to crash" had increased by 2,450% in the previous month. In just a week, searches for "why is the market so hot" had doubled. In the same week, the phrase "how much above asking price should I offer on a home in 2021" rose 350%, indicating that the market may be in a bubble. What is a housing bubble? When the market price of residential real estate grows rapidly, it is called a housing bubble. This usually occurs when the market's demand for houses exceeds the market's supply. Speculators enter the market in response to the unexpected increase in housing demand in order to profit from future expectations. As a result, home values skyrocketed, causing the housing industry to expand even higher into a bubble. Now is the time when housing prices have risen to the point where they are no longer affordable to purchasers. Homes are overhauled as a result of the unsustainability induced by growing prices. To put it in another way, price inflation. Prices become unsustainable, yet supply increases, which is intriguing. Simple economics is at work here. What happens now that demand has decreased? The bubble explodes as prices plummet and the bubble bursts. So, do we have another housing bubble in our hands? One hopes not, because the last one caused a worldwide financial crisis and the biggest economic downturn since the Great Depression when it burst. At a recent Morningstar Incorporated investment conference in Sydney, bearish investor Jeremy Grantham observed, "Real estate is suddenly pretty bubbly in almost every interesting market in the world. There will be a day of reckoning at some point." When it comes to real estate, demand forecasting is a difficult task because residences are purchased for consumption, investment, and sometimes investment cum consumption. A broad-based investigation, on the other hand, can surely aid in the identification of a pattern. Real estate demand forecasting has always been a conundrum for economists. According to economic theory, consumer goods such as iPhones, vehicles, and mobile data have a falling demand curve, which indicates that as prices fall, demand rises. Trading volumes for financial assets such as shares typically decrease as prices fall, indicating fewer demand. When it comes to real estate, however, demand forecasting becomes more complicated. Some people buy homes for consumption, some for investment, and yet others buy property for investment cum consumption. As a result, demand forecasting has always been a dilemma. During the coronavirus pandemic, housing has been one of the few economic bright spots. Falling mortgage rates encouraged demand, resulting in a surge in home purchases. The buying frenzy swiftly consumed the majority of the country's available supply, prompting owners to demand even higher prices. as a result of the record-breaking inventory shortage. According to Realtor.com, there are about half as many properties actively listed for sale now as there were a year ago. As a result, competition has surged and buyers are more likely to find themselves in bidding wars with each other. The numbers don't make sense. How do you make a rational offer on a house when you have irrational people in the game? Inquires James Karma, a software developer who has toured over 100 Austin homes. So, why does it seem like the real estate market will crash in 2021? Economic factors. Economic factors such as demand and supply are typically at play in a free market like real estate. We have an extreme shortage of stock on the market for sale. At the same time, the record low mortgage rates are boosting the demand to buy by millennials and Gen Xers, says Frank Northaft, a chief economist at CoreLogic. Prices in New York City and others. According to Bloomberg, property prices in New York City are rapidly increasing. New Yorkers who may still be working from home a year after the pandemic began dispersing throughout the boroughs in search of more spacious and affordable accommodation to escape the high price demands of the city. Inventory shortages. A lack of inventory is one of the major causes to the current red-hot market and sky-high pricing. Experts from all across the world will give you this explanation. Owners don't want strangers, possible buyers, wandering through their living quarters during a global pandemic. A situation that has been grappling the world for more than a year. Therefore, considerably fewer homes are being put on the market for sale, resulting in a dearth of inventory. The investors. On the other hand, investors or homeowners will try to take advantage of the rising demand by raising prices. As prices climb, some people who were comfortable with the initial price will find themselves unable to afford the home at the asking price. Price increase is now reducing demand, justifying the negative link between interest rates and inflation. The number of people who flip houses is increasing. In less than a year, a flipped house is bought, work is done on it, and it is sold. The development of home flippers inflates the demand for property in the real estate market, causing house prices to climb even more with an increased speed. Price increases are indicative of an asset bubble that could possibly explode. On the other hand, the COVID-19 has slowed economic activity and resulted in a high unemployment rate. The US shed 140,000 jobs in December 2020 alone, according to the Labor Department. As the number of job losses rises, fewer individuals will be able to afford to buy homes, and those who already have mortgages would most likely default, increasing the number of foreclosures. Increased interest rates. Interest rates and house prices tend to be inversely related. When one side outperforms the other, a disequilibrium is generated, resulting in a market imbalance that requires a solution to restore equilibrium. Interest rates and housing prices, for example, have an inverse relationship according to basic economics, as mentioned above. As a result, when interest rates are low, housing prices increase. What is the reason for this? It's simple. When the rate is low, housing becomes less expensive or more affordable to obtain. This, in turn, leads to a high demand for housing because it is inexpensive at the moment. The same is true in the reverse. Interest rates are a major factor in causing a marketing failure. And if it happens soon, it will undoubtedly be a major contributor in the crash of the real estate market. Mortgages will become extremely expensive as interest rates climb up. Borrowers will be discouraged from taking out loans as a result of this. On the other hand, home construction will be affected as well because costs will rise and the availability of housing in the market will decrease exponentially. The bottom line is the housing market really about to crash in 2021? Well, if a combination of the above events occurs, then yes, the market could fall. Many of them are already in the game, and the housing market is clearly overheating as property prices rise. If you're in the market for a home right now and absolutely can't wait, continue to be patient. Take proper precautions. Never spend more money on a house than you can comfortably afford. Consider other options, such as properties in different neighborhoods or properties that haven't yet been posted on the market, that not many people are talking about. Look for properties that have been on the market for a while and appear to be overvalued. There is much less chance of a bidding war, and the homeowner may be reasonable enough to entertain offers worth negotiating. With this, we come to the end of today's video. We hope your questions were answered. If you like our content, don't forget to subscribe and hit the bell icon to be notified every time we upload a new video. We'll see you next time.